Today's daily number 8.5%. 8.5% is the amount of inflation growth during the month of March that was just reported today. So we'll definitely be talking about today during today's daily number podcast. It is April 12th. April 12th, just 6 days before the IRS tax deadline. So hopefully everybody has all their stuff in order, ready to file on time, file early. If you don't have it on time, you don't have it early, make sure you file an extension. All right. I'm Kamari Ellis. I'm your host. I am a tax accountant during the day, all around money nerd, and I love to talk to you all about money daily with the hopes that this information helps you to seek financial education on a higher level. Okay. So in today's show, we are going to talk about, as always, our stock market rundown. We're going to be talking about inflation's ugly face, and we're going to talk about why financial advisors want to include crypto in their clients' portfolios. And as always, we have to end the day with our affirmation of the day. All right, so appreciate everybody that's here. Make sure you jump into the comments. Let me know you're here. Let me know where you're hailing from. And if you're watching on a replay, do me a favor. Do hashtag replay. Do me a favor. If you also like this comments or like these shows, like this channel, do me a favor. Like the channel, share the channel, and leave a comment on the channel as well. All right, so let's jump right into it today, folks. Again, we're going to be talking about inflation. But before we get to that, let's talk about these markets. Markets got hit a little bit today. Because of the numbers, of the inflation numbers. And I believe the markets got a little bit spooked, but we all knew this, right? We've been talking about this. I've been talking about this for weeks, months, almost feels like years. Okay. But S&P 500 closed today at 4,397, 4,397, down roughly a little bit more than a quarter of a point of a percent. Again, a little bit spooked. And it also seems like this whole Russia-Ukraine crisis, conflict, war, whatever you want to call it, isn't going to stop anytime soon. So we're expecting, the markets are expecting a little bit more turmoil, a little bit more slowdown, and it's going to be a little bit more rough. Okay. So keep that in mind. Now, again, as we look at this, right, we go to oil. Oil is above that magic number, that $100 level, sadly, right? This is actually sad because oil was doing so good underneath the $100 level, starting to see some relief amongst the pumps. Even Joe Biden said we're going to start using some ethanol, more ethanol in our gas mix. What does that mean? We're heading into summertime drive season. So instead of companies just using more oil in their refining process, they're going to mix in ethanol. And what does ethanol come from? Ethanol comes from corn. But it's easier to grow and get corn than it is to pump oil. So that's the rationale that this will help ease oil prices a little bit, just a little bit. But keep that in mind. And as we look at our next thing, which is gold, you'll be shocked by the number a little bit. Like I said, it's starting to inch up. So gold closed at 1968. We were hitting closer to 1800, right? Or at least sub 1900 for quite some time. But this war, this conflict just won't let gold go away. So it's still here. It's still going to be around. Again, at $1,968 per troy ounce. That's what gold is hitting for right now. That's the price of gold right now. And again, like I said, I don't think it's going to crack above this $2,000 level unless there's something really crazy. But I don't think it's going to fall a whole lot either. It's just going to be kind of steady as she goes. So that's a sad thing. Hopefully we can get away from that and get it to go a little bit lower. And that will be a good sign that things are getting a little bit better. Now, Bitcoin. Now, we talked about these correlations between the stock market and Bitcoin. Bitcoin was up today. Stock market was down today. So that kind of broke that correlation for the day. So we are seeing one Bitcoin, 40,177, $40,000, $177. That's what Bitcoin is at right now. So again, that is the flavor of the day. Everybody's into crypto. We'll definitely talk about that a little bit more as we're seeing financial advisors start to talk and push the idea of their clients, including crypto in their overall investment portfolio. So this is going to be very, very interesting as we get further into this investment cycle. All right. So again, we wanted to talk about inflation. That is the news for today. That's the big headline print for today. But before I get too further along in the overall show, I want to send my prayers, love, and light to everybody impacted by the Brooklyn shootout, smoke out, whatever you want to call it. Really weird. Man got on the subway, released some smoke grenades, started shooting, and he had a gas mask on. I mean, I don't know where it's safe during this time, but just want to send love, send light to them. Hopefully they'll be fine. Hopefully they'll get some counseling. That's got to be a traumatic incident. I don't see how it can go any other way. I know I would be traumatized if something like that happened to me on a New York subway. So again, sending love out to them. But as we get back into the rest of our show, inflation, 8.5%. Again, we are seeing everything go up in prices, from food to gas to used cars, right? I think I've been talking to you all a little bit about this vehicle we got for my son's detailing business. It took us a little bit. It wasn't just, oh, there's a car and we can find it. We had to hunt. We had to hunt mighty high and mighty low for this vehicle for his mobile detailing business. But we found it. And when we go back and we look at some of the pricing of what's going on with inflation and the overall rate of CPI, it's a little crazy. It's a little crazy. And I wonder how much further it will go. Now, some of the analysts are starting to say they believe it's going to wane. It's peaked out. I wonder because there's been nothing really to change, right? Because nothing changes unless you change. There's been nothing really to change recently. We have some increased inflation. You have some increase of the interest rates. We had the Fed Reserve talking about them tapering their bond buying or their balance sheet program. But other than that, we're still having some supply chain issues. Everything's still up through the roof. And I don't know. And sadly, what really sparked all this is COVID. And that's been rearing its ugly head. So that could potentially slow some things down too. But I want to talk about this story a little bit more in depth. Oops, that's not what I wanted. Let's talk about this a little bit more in depth so we can go into it. Because these numbers, I was actually astounded by a lot of these numbers because they were so horrendous. Sadly. But as I pulled that up, I wanted to pull up a couple of stories that I saw talking about inflation. So as this scrolls, my machine is just moving horrendously today. Hopefully it will catch up and get with the program. But I guess I am stuck on it. It's a funny thing as we get more and more dependent upon technology. But the whole point of technology is for it to help our overall lives. So let's see. All right, here it goes. It's scrolling up. It's scrolling up. Headline today: inflation accelerated to 8.5% in March as oil prices soared. All right, so here is the front page of the WSJ or the Wall Street Journal. And I thought these charts were really telling, right? So we're looking at gasoline is top line, almost up 50%. Now these numbers, this bar chart is a 12-month bar chart. This is what has changed from last March. So March of 2021, this is what pricing changes have gotten to. So gasoline's up almost 50%. Used cars and trucks. Used cars and trucks. My mother would kill me over my enunciation. Um, Used cars and trucks are up 35, almost 40%. Oh, there it is, 35.3%. Energy is up 32%. Electricity up 11.1%. Food is up 8%. Now, that's not talking about chicken wings because chicken wings have been through the roof. All right. Food not at home, so they're talking about eating out, is up 6.9%, largely because restaurants and the businesses have to account for the other food price increases, so they then have to pass that along to their customers. Apparel, 6.8%. Right, this is crazy. Shelter, 5%. Now, this is all based off CPI, right? Again, CPI is just an overall average, right? CPI, Consumer Price Index, is an overall average of the prices, right? We know shelter is up more than 5%. I've reported on the cost of real estate and how it's going up significantly, especially in the month of February. It's been up outstandingly, right? I'm trying to monitor myself and not use certain words and be good here and be well behaved. So if you hear me stutter a little bit, that's because I'm trying not to cuss. I'm just being honest. All right, so there was a report in the Wall Street Journal, report in the Wall Street Journal today, talking about inflation again. U.S. inflation accelerated to 8.5% in March, hitting a 4-decade high. So 4 decades, right? So what is that, like the 80s? Were any of you all born or alive in the 80s? If not, you might not be able to catch up to this or stay on to this. But if you were, as I was telling on myself, we know in the 80s, especially the early 80s, the late 70s, early 80s, there was high inflation. Things were crazy. There's a chart here I want to show you as well. And it was just through the roof. And oftentimes when we have super duper high inflation like this, it tends to lead to recession. A lot of times it tends to lead to high prices. As you see, those high prices tend to bring down overall economic activity. So keep all that in mind as we go over this article. So the green parts here I had to highlight because I thought they were really important. So U.S. inflation surged to a new 5-decade high of 8.5% in March from the same month a year ago. So again, 12 months ago, March of 2021. That's the time they're counting to this March that just passed last month. The cost of prices, goods and services have increased by 8.5%. And think about it like this, right? I know people do not think in inflation or interest rates. Let's say you had $100 worth of groceries last March. You spent $100. This March, right, that just passed, that same bag of groceries will be worth $108, or you would have to spend $108 to get the same level of groceries, same level of milk, same level of eggs, same level of bread. It now will cost you $108.50. So, all right, I want y'all to keep that in mind as we go through everything. All right. So, again, U.S. inflation surged to a new 4-decade high of 8.5% in March from the same month a year ago, driven by skyrocketing energy and food costs, supply constraints, and strong consumer demand. The Labor Department on Tuesday said the Consumer Price Index, which measures what consumers pay for goods and services last month, rose at its fastest annual pace since December 1981, up from 7.9 annual rate in February. Rising prices have been unrelenting, with six straight months of inflation above 6%. This is well above the Federal Reserve's average 2%, or 2% average for the Federal Reserve, right? So again, inflation has been off the charts. It's through the roof right now. It's really to the moon. I know everybody thought Doge was going to the moon, but they were wrong. Inflation is actually going to the moon. All right. And so all right, let me go through this. High inflation is a downside of booming growth as the economy bounces back from COVID-19, powered in part by low interest rates, government stimulus to counter the pandemic's effects. The Fed's top goal is to reduce inflation. All right, so that talks about the Fed Governor Lael Brainerd. I watched her earlier today. Very, very interesting interview. Basically, he said the Fed has been caught with their pants down. But guess what? If you've been watching me, because I'm almost here every day, I told y'all that almost a year ago. Told y'all the Fed was slow to react. All right, but as we go back into this, let's look at this here. Russia's invasions of Ukraine drove a March surge in oil and gasoline prices, which hit records in mid-March, and overall energy prices shot up 11% from the prior month. So we're looking at month-over-month increments here. The department said prices for groceries accelerated in March, rising 1.5% from a month earlier, while the cost increasing for dining out moderated. Now, oddly enough, I also read a report that it said buying groceries at this point right now is actually cheaper than eating out. Excuse me, flip that. Eating out right now is actually cheaper than buying groceries. I don't know what bizarre world we are living in, but that's really weird. Again, eating out right now is cheaper than buying groceries. So weird, so weird. And that's what this article just echoed, said rising prices. So prices for groceries accelerated in March, rising 1.5% from a month earlier, while the cost increases from dining out moderated. So groceries went up, dining out went down. That's weird. All right. So I won't spare y'all the other boring stuff, but I want you to look at this chart. I want you to take a look at this chart real quick. This chart is very telling. So this chart right here covers inflation, covers CPI, right? Which is a representation of inflation. So in January 1982, inflation was 8.4%. Right now, inflation's at 8.5%. So we're beating the super high inflation of 1980. What was that? 1982. Now, if you also look on this chart, it's going to show you here that when it hit that super high rate of inflation, the next thing to come was a recession. And we all know what recession is, right? Y'all pay attention. Y'all got y'all notebooks out. When I talk to y'all every day, recession basically is when economic activity in the United States slows down, measured by GDP, gross domestic product. All right. So keep that in mind. So high inflation, usually the effects of high inflation leads to recession. Now, this isn't foolproof. This isn't me looking in the crystal ball. This is just saying this is what happens throughout history over the last 40 years, right? Now, going back to that chart, right, you can see it here. So inflation has fallen, right? Then when inflation rises, 84 is at 4.2%, it falls. So everything ebbs and flows. What goes up must come down at some point. The question is, you never know when it's going to come down. Now, you'll see this here. And if anybody were to overlay an economic cycle on top of this, you'll see you have booms and busts. And so here in 86, we had an inflation of 1.1%. Then come here in 1990, 6.3%. You could also overlay this probably with wars and skirmishes as well, and you will see some spikes also. All right, so in October 1990, inflation hit 6.3%. Now, skip over, we get to June or August of 2018, we have inflation spikes, 5.4%. Anybody remember what happened in August, September, and October of 2008? Anybody remember? If you remember, throw it in the chat. But in August 08, right, spikes, people were buying real estate like crazy. A lot of people couldn't afford it. Money was free, almost. Interest rates were pretty cheap, right? People were buying real estate. Everybody was watching HGTV and all the flipping shows, and they thought they were investing or real estate investing gurus. And then what happened? Then the markets crashed September and October, right? Actually, you could probably overlay the stock market on this as well. But you can see this here. You can see this here. I'm sorry, I took it off the screen. You can see this here, right? In July, we hit that peak. It fell. Now, you know what? At one point, I'm gonna pull up the stock market for that same time period so you can see what I'm talking about. But you see here that inflation spiked. We hit a recession, right? These gray areas are recessions. So things slowed down. And what happened during that time? Things got a little bit crazy. So many people say history doesn't repeat itself, but it definitely rhymes. So keep in mind that this could be a leading indicator to what happens next. So we have super high inflation. We have coronavirus. We got labor shortages. We have supply chain shortages. Things are crazy. What's going to happen next? Interest rates are going up. Bond pumping their fake money into the economy is coming down. And the only thing that potentially happens next is going to be a recession. Now, not my prediction, but I'm just looking at what's happening, what has happened in the past. And that could kind of be like an educated guess. Now, out of curiosity, when I read these things, all kinds of questions come up in my mind. So I like to kind of walk with y'all and bring y'all along to what's going on in my mind as I look at these things, right? And so when I look at that inflation spike, I think about the stock market. I think about how the stock market, it looked very similar to the stock market's trend. So I want to pull that up real quick. Just give me 1 second and we'll go over that. But I mean, what can you do with inflation? What can you do while you're waiting out inflation? Because it's going to come, sadly, because we have folks who are in power at the Fed Reserve and in Washington, right? The politicians who are just giving out money. And I'm really not the anti-stimulus guy. I'm also not the anti-social, what do they call it? Social welfare guy. I'm not, because little secret, I've been on welfare before. So I don't look down on people who are on welfare now. And one of the things I always tell folks is that we talk about we, meaning just everyday citizens of the United States, talk about people being on welfare, but we never talk about corporate welfare. How the U.S. government gives major tax breaks, sometimes actually cash incentives to actual profitable corporations, not poor corporations, but profitable corporations. And so how can you justify that and not think about how the needy and the poor need a social safety net? I don't know. But sadly, I look at things a little bit differently. I guess because my upbringing is a little bit different. My experiences are a little bit different. And I tend to care. I think I do anyway. All right, so let's look at this. This here is a monthly chart, candlesticks. Now, I'm just going to show it going back to 2008. Here, let me throw this off. That's a little chainer. That's an indicator. You guys don't got to worry about that. But here, when we go to, what is that? We go here. Let me pull this back some. Can y'all all see this? Let me blow this up some. Because sometimes it's good to get the graphical representation of a thing. So I want you to see this here. Remember I said it was August 8th, or August of 08, right? Okay, so the market had already started to fall, and then it fell more. But when you look here again, it fell August 8th, August of 08, to roughly, and each one of these bars represents a month, right? So each month it kept falling. And I got the janky internet, y'all, so it's lagging on me. Then it bottomed out in March 09, right? Just to give y'all a graphical representation. Let's see, blowing this up a little bit more. So here again, March of 08, that's when it bottomed out. That's when it bottomed out. All right, so remember I was talking about that when we were talking about, or when I was talking about the correlation and the numbers of inflation and how they look very, very similar. And so again, here we are looking at August, if I can get it to stand still, August of 08, 2008. And then it came down, had a little bump here, right? 2029. And then the prices continue to fall. So there is a level of correlation between stock market activity and CPI, Consumer Price Index, aka inflation. So I would keep a lookout on that. I would definitely keep a lookout for that, because that can definitely be that's definitely storm clouds that are warning you that a storm is coming, right? Those are dark clouds letting you know that a storm is coming. All right, so keep that in mind, y'all. Keep that in mind. And as we go to our next story, I wanted to keep that up because I saw another report where they talked about financial advisors. And y'all all know I am a former financial advisor. I was Series 7, 6, 65, 63, life and health. I had all those investments, all those licenses. I had all those licenses. So I saw this article and I was wondering to myself, when it says, oh, why did it flicker? Okay, there we go. Almost 75% of financial advisors surveyed say a spot crypto ETF would make them likely to invest clients' money in digital assets. So I said to myself, why do they care about this? Why do they want their clients to be in crypto assets? And so y'all know I have a love-hate relationship with the financial services market. So in the financial services market, my love-hate relationship with it is that it's oftentimes more focused on sales instead of stewardship. It's oftentimes more focused on selling products as opposed to getting people the products that they need and will be very helpful tools for them in their life. And listen, I totally understand that people need to make money, and we all can't just give out our time, expertise, and services to people and not be able to put our daily bread on the table, bring the bacon home so somebody can cook it. But you still can do business right, in my opinion. Those are just my opinions, right? But my opinions oftentimes conflict with those in the industry. So again, almost 75% of financial advisors surveyed say a spot crypto ETF would make them likely to invest clients' money in digital assets. And for all of y'all that might not know, it says spot. What does spot mean? Spot just means following a price. So something that follows a price and is invested usually in the asset. So for example, we covered gold. We talk about gold every day. That's the gold spot price. And then that's the actual price of gold. So here they're talking about a spot crypto ETF. So it could be spot Bitcoin, spot Ethereum, spot Cardano, or any of those. Okay. So looking at this survey from NASDAQ, a NASDAQ survey shows 72% of financial advisors would support a spot crypto ETF product in the US, right? The majority of respondents in the March survey said they would be more likely to invest in digital assets if such an ETF were available. And I want to tell y'all what I think about this when we get done. The SEC hasn't approved the spot Bitcoin ETF, but has approved several future linked products, right? And we've talked about that. If you go over to the Finance Rebel channel, there's an interview on there that I did with By the Hood talking about the new Bitcoin ETF that debuted. And for the replay, I'll have this here as well, so you can click on to that. All right, so exchange traded funds tied to spot prices of cryptocurrencies will prompt a majority of financial advisors to put their clients' money to work in digital assets, a NASDAQ survey found. All right, 72% of advisors would invest in crypto if a spot ETF product were available, according to a survey of 500 advisors who are currently or considering allocating to digital assets. So when I say allocating, let's say the client has $100,000. They might say, you know what, we're going to allocate somewhere between 3 and 5%. So they're going to put $3,000 to $7,000, or did I say 5%? $3,000 to $5,000 into this portfolio. Okay. So the report published Monday highlights support for such a product to come to market. The Securities and Exchange Commission has yet to green light numerous applications from companies seeking to launch Bitcoin ETFs, the first of which was filed in 2013 by the Winklevoss twins. If any of y'all know who the Winklevoss twins are, put in the chat if you know who the Winklevoss twins are. Among this year's rejection were filings from Global X, NYDIG, ARC21 shares, with the regulator citing concerns about the lack of investor protections. So this is the SEC trying to fulfill the role of a regulator, which they are. All right. Over the last decade, financial advisors have been focused on shifting assets into index funds. As they incorporate digital assets into their investment strategies, they are expressing strong interest in a similar vehicle that can offer broad asset class exposure for their clients. Jack Rapport, head of digital asset index research at NASDAQ, in the survey statement. So he said that. All right. He said that vast majority of respondents to the survey conducted in March either plan to begin allocating to crypto or increase their existing allocation to crypto. So some haven't done it. Some are looking to go more into it. All right. As demand continues to surge, advisors will be looking for an institutional solution. As demand continues to surge, advisors will be looking for an institutional solution to the crypto question that now dominates client conversations, Rappaport says. ProShares in October launched the first Bitcoin futures. Bitcoin futures is not Bitcoin, y'all. Bitcoin futures ETF to reach the market. The ProShares Bitcoin strategy ETF gives exposure to Bitcoin through contracts that speculate on how the price of Bitcoin will move. All right. 86% of advisors already investing in crypto expect to increase their allocations over the next 12 months. While 0% report plans to decrease. So that's pretty telling, right? 86% of advisors already investing in crypto expect to increase their allocations over the next 12 months, while 0% report plans to decrease. So there's some folks that are going to be buying from the survey, but nobody's saying they're going to sell or stay on the sideline. That's a strong statement. It said of the other group, 50% use Bitcoin futures ETF and 28% plan to start using them in the next 12 months. So that report is telling. That report is telling is because advisors who often have the trust of their clients to say, hey, I want to invest in digital assets, AKA crypto, right? AKA the blockchain, AKA Bitcoin, Ethereum, Litecoin, yada, 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 yada. So as this asset class gets more and more popular, people want to follow along with the herd and buy more and more. Now, do you think advisors want to do this because it's in their client's best benefit, best interest, or do y'all think there is an ulterior motive? Chime in and tell me what you think that is. Now, for me, being one of those guys at one point, right, dealing with the commission schedule, understanding that this industry runs off of assets under management, which means, or you might hear people say AUM, assets under management. The more assets they manage, guess what? The more money they make. All right. So at the end of the day, if we are seeing a flow of money going into digital assets and not into the assets that they make money off of, well, what do you think they want to do? What do you think next steps are? They want to go to the place where their clients' assets are going and make them to be readily available for them to charge commissions on them, for them to charge fees on them. Do you really think it's for client benefit, for advisor benefits? And listen, my OG, one of my mentors says, Kamar, you really are hard on financial advisors. We aren't all like that. Say, no, they all aren't like that. But I do have an issue with the industry overall because the industry is very much pay to play, right? And what I mean by that is the richest people get the best advice, oftentimes. The richest people are also tend to be the more savvy, okay? For working class, everyday folks like you and I, we just get the products being sold to us. We just get the products being pushed to us. So as these advisors get more and more savvy and get more and more products to sell, to capture more and more of the client's assets so they can then make more money, a lot of times it's just more product, more junk for us, the working folks, to deal with, to sift through. So again, it's going to happen. But as I always say, make sure y'all do y'all due diligence on anything that you're looking to put your money into. As I always say too, this show is not a buy or sell recommendation. It is for entertainment and educational purposes only. All right. So again, remember, most people, not all, most people do things that are in their own self-interest. So keep that in mind when folks are trying to recommend or tell you to do something. So keep that in mind. Please keep that in mind. All right. So today, the affirmation of the day. Affirmation of the day. I am an arrow. The universe only pulls me back to shoot me forward. Did y'all get that? Did y'all hear that? Again, I am an arrow. The universe only pulls me back to shoot me forward. Last time, remember, hopefully y'all are saying these with me, right? I am an arrow. The universe only pulls me back, right, to shoot me forward. That's a dope one, I might say. That's a super dope one. Remember, a lot of times we go through trials and tribulations. We think it's something bad, but oftentimes there are great lessons that need to be learned in those moments when the universe is pulling us back. I'm pretty sure y'all have all heard, right? I take one step forward and then go 2 steps back. Well, part of the lesson in that is to go forward to see that there's progress, right? And then when you have to go 2 steps back, there's another lesson in that to say, hey, wait a minute, you didn't check this box. You didn't dot this I, you didn't cross this T. Got to be a little bit sharper next time as you go forward. You might have to be a little bit more patient. Sometimes you might have to be a little bit quicker. But again, what is the lesson for you to learn at that moment from that arrow being pulled back so that the universe can thrust you forward? All right. So listen, everybody, this is the Daily Number Podcast. We're here every day at 8 p.m. I always appreciate you guys stopping in, hanging out with me as I bring you the news daily so we can use the news daily as a learning tool so we can increase our financial education. Okay. So all of y'all continue to be great. And remember, always continue to see the light. I'll be back tomorrow, 8 p.m. Do me a favor, share this out, leave a comment, like it out. If you know anybody that's looking to increase their financial education, share this with them. But I'll see y'all tomorrow, 8 p.m. So long. All right, that concludes today's recording of this scheduling. Why am I tongue tied right now? That concludes today's recording of our regularly scheduled programming. I'll definitely come back through and check out the commentary here real quick. Commentary here. All righty. All right, Tasha, how are you? I ain't seen you in a while. Good to see you back. Tasha Wana. All right, Kara, hey, how are you? All right, I know I asked the question and I then forgot it. I got to come back to it. All right, hey Northern Bell, how you doing? How you doing? Welcome, welcome, welcome. All right. Oh, you're saying you definitely was born and you're around in those times. All right, cool. What's up, Epic? How you doing? Epic says America's public debt surpassed 30 trillion. Yeah, it's up there. And the biggest of that debt is student loan debt. Kara says Reaganomics mortgage was more than equity in the home. Yes, it was. That's what led to the SNL crisis or the savings and loans crisis. I think that was in like 80, somewhere between 85 and 87. Crazy. While all that was happening, crack hit. Think about the confluence. Think about how ironic that is. All right. Oh, you were a Tyler baby in the 80s. Okay. So that means you're younger than me. I was older. Let's see. Looks like I'm going to lose those pounds by filter feeding. If food costs that much for starch. That's hilarious. All right. So Northern Mill says, I sort of feel that eating out had become less expensive. Yeah, a little bit. That's crazy. Canned coconut water is $1. You can make it for about 1 month and have Greta skin and stay hydrated. This is badness. How much greed must we endure? Recession equals reset. Yes, recession does equal reset, right? Build and destroy is a constant theme in human nature. It's always there. All right, Northern Bell says, not long term. I'm sure by the time we account for healthcare costs from not knowing what we're eating, but still, yeah, that's true. Northern Bell, you're right. Shopping and cooking aren't cutting it. Heck yeah, market crashed. It lost tons. All right, so sir, I almost caught a case. Wanted to choke the life out of T. Rowe Price. Why did you want to choke the life out of people at T. Rowe Price? I need to hear that. That sounds like a story in the making. All right, Northern Bell says, I agree. I've been there too. Still in some ways when we consider what's actually welfare. Right, yes. So you were in the industry. I had life and health. I wanted to sit for the Series 7. Why didn't you? I'm sure you would have passed. Tony Williams. Tony, what's up? You look at that Toro stuff yet? Yes, the Winkle Twinkle Twins. So listen, if it wasn't for the Winkle Twinkle Twins, we probably wouldn't be broadcasting right now, at least not on Facebook. They are the folks that got beat out of their idea. So be careful with who you are sharing your ideas with, not to confuse that with being in a scarcity mindset, right? But things happen. I have an arrow in the universe. Where did you find the arrow emoji? That's dope. I have an arrow in the universe. The universe only pulls me back to shoot me forward. Absolutely. All things work for your good. If you can develop the mindset to see it. All right, you thinking about what you're waiting on? All right, so listen, y'all, have y'all all followed the Daily Number Podcast new YouTube channel? The link is in the bio. I made sure I put it in there. JT Coins told me to put the link in the bio, so it should be in the description. So do me a favor. At some point, we're going to move all of the daily numbers from my Finance Rebel page to the Daily Number Podcast page. So the Daily Number will be for daily financial news, and the Finance Rebel show or the Finance Rebel page will be for the tutorials and overall, investment and financial advice as well. Oh, yeah, I dealt with that. I know exactly what happened. All right, so Akira34 says my money. So Akira says she wanted to choke out the T. Rowe Price people because my money when the market crashed in '08, they said you're young, you can recruit in time. Yes, I have followed the new podcast link. Okay. So, but Akira, they were right. They were absolutely right. So if you look at the trajectory of the stock market since '08, right? Market crashed in March '09. That sucker has not stopped running yet. Has not stopped running yet. I don't know when it's going to stop. So hopefully you left the money in there, right? Hopefully you left the money in there. And now you chunky money wise, right? Hopefully. I know because I was one of those advisors at the time. I had those hard conversations with my clients. Now, part of my conversation was kind of cool because I'm gonna tell you what happened. I think I've talked about this before. At my firm, we went to cash before the market fell flat, before the market crashed. Right? We went to cash and some bonds as well. But what happened was when the market started bouncing in March '09, we were trigger shy. And so while we protected the money on the downside, we didn't capture anywhere near of the market money or the market move to the upside. And sometimes that happens, right? Sometimes that happens. So they were happy with us for a little while, and then greed set in. So we were cool when they were fearful. We protected the bread, protected the dough. When the market started running and people said, oh, you're not doing a good enough job protecting our money, because we still weren't unsure about the markets. They said, oh, y'all slacking. You're not doing your job. So it's funny. It's funny how you can do a great job for people, give you all kind of accolades, and then the next minute, like that, you're their biggest enemy. They hate your guts. But that's life. Such is life. All right. Northern Bell says, thank you, because I looked and couldn't find it. All right, cool. You got it now, so lock in with me. Also, y'all all should be a part of the text community, because again, we can't be trustful of these platforms that we do not own. So if you want to lock in with me and I've earned your trust, text me 215-974-0058. I don't spam y'all. Actually, I probably don't text the community enough, but I definitely don't spam y'all because I respect y'all time and y'all money and y'all attention, right? So again, 215-974-0058. All right, connect, lock in, and make sure we stay connected. All right, so you bought a house. Okay. Not sure of the timing, but that was a good investment. All right, T. Rowe Price did not do that for the little people. They let the bus crash hard. It's really hard. Yeah, it's hard. Just because of the way investments are. So I'm going to run because my clients are mad. They want some more of their stuff, even though they just got me the information yesterday. They want it today. So I must go work for the people, y'all. But listen, I'll be back tomorrow, 8 o'clock, the Daily Number podcast here, YouTube. You'll see me on Facebook. But again, soon, everything will just be housed on the YouTube channel, the Daily Number YouTube channel, or the Daily Number podcast on the YouTube channel, and also the actual audio podcast, which I will have going up soon. But again, appreciate you all, and I will see y'all tomorrow night. Later.